In this video, we're going through the Anchored VWAP. A student of mine made $560 within one single trade and adjusts $100 in average first with a not real money account. Here you can see the S&P 500 and the 1 minute chart, and there are these 4 criteria that I would like to give to you, and you will find similarities in these trades what will have more quality than others. That means, first of all, it is very important that we use the Anchored VWAP, the volume weighted average price, when we can see here consolidation phases. When you see up here consolidation phase, the market mostly will not just go down and very trending, it will continue into consolidation phases, even those smaller ones as you see here, there, and down here. So what we use is usually the Anchored VWAP. We place it always on the highest point above, or just any medium rotation. That means in this case, we would place it either here, we would place it here or here, that we have a line that matches with in what angle the market was going down. In this case here, by the way, from the structure, it looks like this. So if we have 1, 2, and 3, just as an example, we have 1, we have 2, and we have 3. Now it depends, of course, how much the market is going down. If the market is going dead straight down here, I would actually assume number 3 would do it and would maybe cut in like this. But if the market comes up here, it is about to test out the Anchored VWAP on 1, 2, and 3, what makes more sense. And you can see here on number 1, it makes the most sense because it cuts here very beautiful inside, what comes by experience by seeing it over and over again. It is very important when using the Anchored VWAP just to use the bigger or medium structure highs, not just to use highs like just like that are too small, because when doing that, over trading may occur. Because in trading, it's very important not just to take a trading signal and trade it. It's more important to have a trading signal that makes sense just as an help, but trading with common sense with your experience. It means when you see that the market is making more red than green candles, thus more length down than length up is very important. And you see also that the market does on the bottom side more also consolidation phases. Here and there, all these candles are more than up here. And that shows us that the market wants to trade lower, what makes sense. In total, when you just look to the left, there are way more candles. So that is one of the main reasons why we could actually expect that the market is going up. But for a smaller structure, when day trading futures, for example, for 1 or 2 hours, it makes a lot of sense to be short oriented. That means more to trade down because we can see here a lot of pressure down. So what the trader did is the trader, because it's in a consolidation phase, placed the Anchored VWAP here. And now the power of leverage is something what is very important day trading futures. You can see here how the trader had here a green and a red candle. And the main reason why we trade color switches is because we have 60 candles within 1 hour, and the possibility to have more than 60 trades within 1 hour is very high for a beginner. And for that reason, it is more that the beginner concentrates on a red and a green candle, or a green and a red candle for trading down in this case, and to wait until the candle is closing. On the right side, there's always a timer using TradingView that can help us like 3 seconds or 2 seconds before the candle closes, that we can see, is this candle small enough? Do we have enough leverage that when adjusting $100, like in this case, stop placement above the red candle, entry after the red candle, so near as possible where the red candle closes, before it closes like 2 seconds, 3 seconds sometimes. And then when the market goes against us, we would lose $100. But if the market goes in our direction, just this push here, just one single candle here is $300, $200 worth, what is very cool. And in the next 5 minutes or 7 minutes, you can see here how the trader made $560 in this case, because multiple hours, that means the risk reward ratio was 5.6, trading for this bigger structure and very fresh low here. Usually there are also lows on the left side, what is very important, what are most likely to be touched. But in this case, when making the chart very small and looking to the left, you can find here how the market was structuring up. That means there was strong pressure up. And what happens most likely is just that the market is going a bit down and then it just continues to go up, and either goes then in the consolidation phase, what makes not that much sense to trade anymore, or it just continues the bigger trend. So in this case, it's very important when starting to trade here, what the trader did, where my white line is. And when ending the trading time here on the right side here, where my next line is here. Then it's about to figure out what makes sense in this time to trade. And usually it's not just the move that you see afterwards. it is the move that makes sense to use. Like in this case, the trader had here the informations that are just named more red and green candles, sees that the market is structuring down. This is the volume weighted average price on the 1 day setting. And you can see how the market was touching it, and it's like a magnet. And I think it makes a lot of sense that when the market goes away, we see that the market has pressure down to trade to this 1 day VWAP as you see here. And if there's enough pressure that the market will eventually reach this low, what just happened, to make here the $560 trade. There are also some other losing trades. As you see here, for example, this is a losing trade in this case. The trader was selling and adjusted $100. But the criteria, lots of green candles here. You can see very obviously the market is more length up than length down. So in this case, it would be better preferred actually to buy. But the trader actually knew already that it makes less sense, that the market has less power, or else the trader wouldn't have sold here. That means when having the intention to sell, and these criteria are not meeting, all 4 of them would be good, then I think it would be not good to sell that much. We've really figured out that also with the trading students, we can see also with the trades that best trades are happening by having these 4 criteria. And if the market is consolidating, to work with the anchored VWAP, that means when you see here those bigger faces. But if the market doesn't have these bigger faces and just structures and smashes in one direction, like here, for example, then to lose less the anchored VWAP. But very important is if we see this just within the same day, very often, even though when we see that, I think it would be better not to trade here right away very aggressively inside. Sometimes I think it would be better to work with the anchored VWAP, especially as a beginner, using a not real money account, a demo account.